So we're going to focus on the GEEK CFI financial products. And at the end of the session, there would be time for asking questions, and I'll be able to answer it. But if in the meantime you have any question that you are scared you might lose it, just drop it into our chat box, and at the end we will then have a look at all the questions. So tonight we're going to look at what is the origin of funds for the GEEK group, because a lot of people, when they hear bank, they think government gives you money. And then also, how does our funding model work, which is totally different from any other community bank out there in the market. Then we're going to focus on some of the products and product rules, some of the loan rules, what you need to know when you apply for a loan, what is the loan application process, and then we're just going to finish off with some application of how to use the loan link share product. So the origin of funds and the CFI funding model. So there in the middle, you'll see our logo, GEEK CFI. Now, the one source of money comes in as interest-bearing deposits. So that happens when you save into the fixed savings, or into the 32-day call account, or into the investor account. And with this money, we just keep it on the money market, and we buy retail government bonds with it. Later on, you'll see that I've added the fact that we can also lend you some of this money, but there are some rules that needs to apply. But as long as you know, the reason why we can do what we're doing is that we've got two sources of funding. The one is money coming in at interest, and the second one is money coming in at zero interest. And that's the exciting one that we will go into more depth in, and that is link share. So people can then, if they've invested at zero interest, they can then also borrow at zero interest loans to members. Now, how does our funding model work? Well, we'll tell you about it now, but we also have some other income from loan admin fee, and there's a small interest spread that if we get your interest-bearing deposits and we then buy retail government bonds for it, it's a small little about 0.25% that remains in the CFI to help pay for overheads. Now, our financial model says a member can choose between the 60 Rand or 120 Rand per month option. Now, understand that, and there's a once-off 250, which covers your 100 Rand for compulsory membership, also referred to as having a mandatory share. And you can only be a part of the bank if you have at least one mandatory share. And whenever you leave the bank, you can have that share back. So that 100 Rand is not going to earn you interest. It's just to comply and to have the right structures for the Reserve Bank. But then on a monthly basis, you pay 120 or 60 Rand. The 120 Rand includes funeral cover, and the 60 Rand offers you then all the other stuff that we have there. So with that, you get 4 CFI accounts, which we'll go into more detail. There's a legacy coach program that we haven't gone into too much detail yet, but you have access to the GEEK Institute with a wealth of information available to you. We also, as a bank, have to pay royalties or licensing fees to Mambo, which is our banking licensing software. And then we have back office staff like our IT guy, the accountant, the manager, and the admin assistant that needs to be paid salaries. And then we have to comply with the regulations and submit annual audits, and that costs money. And then also the regulatory compliance to the National Credit Regulator, NCR, as well as South Africa Reserve Bank, where we fall under the Prudential Authority. But all of that is funded out of the 60 or 120 Rand per month. If there's any surplus left, that then becomes an asset of the bank, and at the end of the year, the board can decide how to then share that money back to the members pro rata to their shareholding in the bank. So if you have any question on any of these things, just make a side note and we'll come back to it later on. Then you need to understand the products and the product rules. So once you remember, you now have one vote, and whether another person has got 1 million shares and you only got 1 share, each of you only got 1 vote when it comes to electing the officials for the board or for the various committees that we need to, one person goes off, another people come on once a year. Now the 2 products, and I've grouped them as normal financial products and then sophisticated products that I will introduce you to just now. The one product is called lump sum savings, and that's designed for a member who don't want to take risk with his money and he just wants the best possible interest on his money. And they then bring a lump sum to GEEK, and at that point in time we will then quote them on what is the best rate we can get for a 6-month or a 12-month or a 24-month period. If they're happy, we then tie the money up with, and we buy retail government bonds with that, and then 6 or 12 or 24 months later, capital back plus interest. Then we also have a 32-day call account, and I put that's for your personal projects. So the idea then is put some money aside for that end of the year Christmas gifts or the beginning of the year school fees, or save towards a product or project or something that's important to you. While the money lies in the account, you will earn interest on it. Currently it's just over 4%, but whenever you need it, you just send an email to the manager at geektrust.co.za, call out all your money or some of the money, and it's then paid into your account within 32 days. Then we have what I call sophisticated products. One of the products is a product that we've created last year called the investor account. For a long time, we struggled to get our investor club going, so until we've created this product. Now, it works like a 32-day call account, but we give it as a separate name. So it's your investor account, it's under your control. Nobody can make decisions where to invest the money. So it's a place for you to save the money, and whether you add to that money 100 as and when, or other people might be able to invest 500, 1,000, more than thousands per month, but it's money earmarked for investment purposes. And I tell people it's your legacy money, that it's your trust money that you trust, that you're a trustee of on behalf of your grandchildren. But the money is released to you by God in small quantities on a monthly basis. So this money is not to be eaten up. Now, what will that money? Well, while it grows in your account, at the back office, we constantly scan potential business opportunities in the area of business or property. And if we find a good opportunity and we do our due diligence and we feel comfortable that it's an above market related growth rate that it offers you, we will then come to our investor club and only communicate to investor club members. This is not information open to the rest of the group. So make sure you have an investor account. But then we will tell you, this is the opportunity that we've now researched, that's now available. This is how you can participate. This is the entry strategy. This is the exit strategy. And then it's up to you to decide, yes, I like it. Yes, I want to become part of it. And at that point, you then give back office notice that I want to participate in this investment opportunity. And then you participate. Remember that while the money is in the investor account, nobody can touch it. It's your money. The moment you take it out into another opportunity, you must understand the risks of that opportunity, because now you are a shareholder or a participant in that risk. So if you have questions on us later, right now the opportunity that we have is a cattle feedlot project where once every 2 months, we take in money and we participate with another company that's been doing this now for the last 3 years, and they do it in collaboration with a professional feedlot company. And then they buy calves with the money, fatten them over a 120-day period, slaughter them, sell the meat, and repeat the cycle. So whatever cycle you come in, if you come in October, your money is then tied up for 12 months and will only be released next year, October. The minimum you need to participate in one of these investment cycles is 500 Rand. There's no maximum. And the company that we've investigated have been doing this now for the last 3 years and have averaged a growth of between 13 and 15% per annum. So that's our investor account, and we are busy looking at some other opportunities which we will notify you once we're happy to move forward on that. Then we'll come back to this in more detail, but it's our flagship product, Loan Link Share, or the abbreviation LLS. And this is where you can get interest-free loans. And there's an up to, you gear on this product in 2 ways. Up to 3 times gearing. So whatever you've invested, you can borrow up to 3 times. And once you become a member, you have to invest for 12 months, but then you can get your first loan over a 12-month period and then subsequent loans over the period that you've been a member of the bank. Now, if ever you need to withdraw money from your Loan Link Share, understand that the money is not in a bank account somewhere. It circulates amongst the members. So you have to give us a 3-month withdrawal notice if you want to withdraw your money or take it out and put it into another product. But there is an option for you to withdraw. The whole idea, however, is you build up your own financial model or your funding mechanism that in future you can know that forever and a day you and your family can have access to an interest-free loan subject to the amount of money that you have invested. All right, so those are the 4 products and the product rules for each of the products. Now, let's look at the general rules on loans. Now, I told you we've got 2 kinds of income. Interest bearing, that means we have to pay the members interest on their money. And then interest free, which means people can then borrow interest free. So on both sides, general rules is that, and that these are rules that are prescribed to us by the Reserve Bank. No individual loan can exceed 10% of the total funds. Now, if you borrow interest-free, then we have to look at how much money do we have in our interest-free fund, and we can then only use money in that fund. So currently, the highest amount that any person can borrow is, because our fund is at 4.5 million, the highest you can borrow is 450,000 Rand. But as the group grow and the investment grow, in time to come, this amount can become much higher. The same with the 5.5 million. Even if you borrow money at interest, the highest you can go on that one, 10% of 5.5 is 550,000. So that's the first loan. The first rule. The second rule is no unsecured loans to blacklisted members. Now, coming back to the Loan Link Share, where you can borrow up to 3 times. If you currently have an impaired credit record, it's the same as saying you blacklisted, then the National Credit Regulator Act forbids us to give any money out unsecured. So we can give you a loan 1-to-1 to the deposit that you've made, but we cannot go 2-to-1 or 3-to-1. So just bear that in mind. But even if you have to start off like that, don't feel lonely. Quite a few people are in that position currently. So then just have a plan to get out of debt, and then in future have that facility available for your family where you can borrow up 3 times. Then another rule is if you in future want to make a loan with, you have to have an account with a commercial bank. Now, commercial banks would then be any one of Capitec, ABSA, FNB, Standard, Nedbank, and so forth. And that's just so that we can then, if you have a loan, we need to have an account against which we can do a monthly debit order. Also understand that when you make a loan, there will be an admin fee payable on that loan. It's a once-off admin fee, and the admin fee is the following. Depending on the amount of money, if you borrow less than Rand, there's a minimum fee of 300 Rand just to process the loan, because we have to pay people for doing that work in the back office. Then as the amount increases, 3,000 to 5,000 is then a percentage of the loan. Once off 9%, 5 to 10,000, 8%, 10 to 20,000, 7%, 20 to 30,000, 6%, 30 to 50,000, 5%, and 50% up will then be 4% to a maximum of 2,600. So as we grow, the time will come that you might qualify for loans in the millions, but then the admin fee will be pegged and fixed at 2,600 or whatever is the latest peg that's prescribed by the National Credit Regulator. So those are just general rules, and it applies whether you borrow money on the interest-bearing side or on the zero interest side. Now let's look at specific rules. If you want to borrow money at interest, and it is possible, but we can then only do it with one-to-one security. So at any point in time, you don't even have to be in the bank for 12 months. But if you can give us one-to-one security, it's possible then for you to borrow money. Understand, subject to the general rules that your loan is not more than 10%. We have one-to-one security, and then there's a maximum repayment on that money of 24 months. So that applies then to the specific interest-bearing loans. Now, a security would then be anything that we can easily call up. We have already taken where people have unbonded vehicles. We could then take basically bring them the car in, but we don't really want to do that. Easy credit would be someone else in your circle of friends who are happy to seed his savings in GEEK as security. That could be one way. Your own investment. So you could have a 6, 12 or 24-month investment on which you earn interest, and then you run into a crisis and you need to borrow money, and now your money is tied up. Well, we can then lend you back the money at interest. So just as long as there's one-to-one security. Right, then we have specific rules for the loan link share. So again, there's the general rules, but then specific rules would be to, let me just go there, 1-to-1 up to 3-to-1. Now the 1-to-1 is if you have an impaired record, until that's sorted out, it will remain at the 1-to-1 level. So whatever you've got saved, you can borrow against that interest-free. Then in time, and we will communicate it to you shortly, people will have to start to qualify for the 3-to-1. That's why we sophisticated product, and we want to make sure that you have complied and gone through the training. Now, initially, as long as for new members, as long as you have done the first video or the first course online, which talks about GEEK and the products, the second one goal setting, and the third one budget, and then do the once-off annual interview with your legacy coach, then that will you will then comply to qualify for an up to 3, provided that you haven't got a bad credit profile. However, in our current COVID situation, and we don't know how long this COVID lockdown can last, and we have to first get certainty and finality, we have brought down the 3-to-1 to 2-to-1. So at the present moment, any loans that you apply for can only be at the 2-to-1 level. Also understand that any money over and above, so that's the unsecured portion. So if you borrow 2-to-1, 50% of that money will then be unsecured. You actually use other people's money for that. Back office will then calculate a 3% provision for bad debt on that money. It's a once-off fee that is added, and then that money accumulates into a provision account, and that helps to protect your capital. So it's an internal insurance that we take out on any loans. Now, the repayment period for repayment is you have to be a member for 12 months before you can qualify to make your first loan. The first loan has to be then repaid in 12 months, and thereafter you can come back for subsequent loans, and then we look at the period that you've been a member of GEEK, and then your repayment period is linked to your membership period. But there's also a further proviso to protect our capital, that there's enough money available for all our members at any time. And our manager and Jason has done a tremendous job in protecting the capital, that there's always enough money for loans. We've never had to reject a loan based on not having enough funds. We've also added a provisor that your repayment period is linked to the amount of money that you want to borrow. So for people who borrow less than 50,000, eventually they can go up to 84 months to repay, which make the cash flow a bit easier for themselves. If you want to borrow larger amounts, 50 to 100,000, it's up to 60 months. 200,000 is up to 48 months, 4 years. And then 200 to 300,000 is up to 36 months, 3 years. And amounts higher than 300,000, we restrict those amounts currently at a maximum of 2 years. So it's just to ensure that people pay back the big amounts faster than the small amounts, so that there's no risk of running out of capital for the lower groups. We might in time look at adjusting these figures, but this is the current situation that applies to loan-linked share loans, and the way you want to then make use of it. Right, then go to the procedures. If you want to apply, if you do a one-to-one security or less than one-to-one security, the process is quick and easy. You basically apply via email to manager@geektrust.co.za and just state your GEEK number and the amount of money that you apply for. The manager will then calculate a quote, a loan quote, add the various fees, and send it to you via email to accept it, and then you sign it off. And once you've signed it off, then the manager can pay it out, because we are not at risk. We have one-to-one security, and that whole process can take within 48 hours if you start the process timeously. The second process is what normally happens if you borrow 2-to-1 or 3-to-1. So again, you start the process with apply via email to manager@geektrust.co.za. Aaron will then send you a loan quote to accept it, and then if you then return it, that starts the process. Now the process dictates the following. You then, as the applying member, has to submit proof of income, 3 months bank statements, and complete a detailed income and expense account so that the credit committee can check whatever you claim as income and expense, whether it actually appear in your 3 months bank statement. Also, we need a motivation for the loan because we give preference for money to work productively. So paying off debt or buying income producing assets or education, but at least we just wanted to check that you don't use this now to go and play the horses. Then the manager collect the document, draw credit profile, and send it to the credit committee. So we've got 3 serving members at any point in time on the credit committee. They don't live in the same town. It all happens online in the cloud, but they then receive it, and in their own good time, they go through it. And when they're happy, it takes us to the next process. They do their due diligence, and then one of 3 results. They approve it, and they give instruction through to manager for payout, or they reject it, and there's no payout, or they come back to the member with an alternative suggestion to say, based on our analysis of your affordability, you can't afford this loan, but what if we structure it in this way? So there's a lot of positive applying their minds that happen from the credit committee. And I can just give them high praises for how they go out of their way to help the member get the best possible solution. So this is then the loan application process, and you're welcome to notes.
Sorry, Coach.
Yes.
Sorry, while you're on that screen, can you just go back to it? Is that supposed to read less than or more than one to one?
Less than one-to-one security means if you borrow 2 times against your money, that means you only got security for 50% of it. Other 50% comes from other members' money. Or if you borrow 3 to 1, you've got only a third security. The other 2/3 is unsecured.
All right. No, thank you.
All right, then just to, without going into detail, you can do these calculations for yourself. But the whole idea to build up an asset for you in the loan link share. So people say, why would I put money in at 0 interest? Well, if you understand that it becomes the leverage, both in terms of up to 2 times, up to 3 times, and eventually up to 84 months, then it becomes a powerful vehicle. So the obvious first step is repay high interest bearing. So if you've got credit cards or clothing accounts, understand that those accounts currently charge you, with all the hidden costs, at least 30% per annum interest. And the sad part is people just pay the minimum to keep pay the interest basically to keep the thing open, and then they have no further use for the account, but they just keep it open. And they keep paying them, that it stands at its peak, and they just keep paying interest. I strongly encourage you to start getting rid of all these high interest debt, and you do it by once a year when you qualify for your loan. Have a goal with the money, and this could be one of them. So speak to your legacy coach on that. The other one is, let me just go there. You can finance cars and equipment. One of our board members had a practical application where his 18-year-old son at that stage wanted to buy a car, and say the car costed 100,000 Rand. He made the deal with the son to say, all right, I'll help you with 50% of it, and you go and borrow the other 50% elsewhere. And the father then used his loan link share facility to borrow 50,000 towards this car, and the son then went to a normal bank process and borrowed 50,000 via the bank on their normal principles. And then 2 years later, the dad's 50,000 were paid down because it was at 0 interest rate, and the son at that stage still owed the bank 68,000 Rand because of all the hidden costs and all the things. So this is definitely a way to start looking at going into the future. Or if you a business person or even for big ticket items in your house, use this money to buy those big ticket items, or if you're a business owner, to buy some equipment. Then another application would be to buy producing assets, and that could be, whatever have high interest rates that it pays you out. So take interest-free money, and even if you then reinvest it into something that pay a high interest rate, that's fine. Another way I recommend to people who are in retail is to use this to buy stock. So every season, people need to replace their stock, and then they struggle to find overdrafts and things with the bank. But with this, you can then borrow the money and buy the stock, pay off the stock, and with the sale of the stock, you pay off the loan. And even if you qualify over 24 months or 36 or 20, however long, you can always pay it off faster. You don't have to wait for the whole period. And as soon as you've paid off one loan, you qualify for another loan. And ultimately would be group loans. And that's where, let's say you and 9 of your friends, however many, each are busy saving, and they can individually qualify for loans between 30 to 100,000. But if you then pool the money when you qualify for the loans, and now you invest it into some sort of asset like a brick manufacturing plant or whatever the case might be, that would be a fantastic application of this process. Now, GEEK and the credit committee would look at each person individually to see if they qualify and release their money to them, but then collectively the money can be paid out to the group, but people individually pay back the loan in terms of what they have borrowed and what they can qualify to pay for. And then just the last one, peer-to-peer product. That's when you have a rich person in the group, but the best he can currently get on one of our fixed loans, our fixed savings products is maybe 6%, and he's looking for a better return. And we might have an entrepreneur in the group, and that person has got a good deal, but he now needs to go and borrow money from African Bank or Capitec because he can't get money normally, and he ends up paying 30%. Now with peer-to-peer, we then bring these two together. We call the one the investor, the borrower, and then depending on the risk profile of the project, if it's a no-brainer like it's repaying a bond, for instance, then the asset is very secure. Then it would be an A grade, and the borrower will pay 9% on the loan. The investor will receive 7.75% of it, and then 1.25% will remain for GEEK to do the administration of the loan on behalf of the investor and the borrower. If it's a B grade, slightly higher risk, the spread is 10% and 12%, and a more risky project like a brand new business that's not yet proven and tested could be 18%, with 14% going to the investor. Now, we don't have too many of these, but within your groups, within your community, know about this product, and feel free to come and test the water. And if you think you've got a deal to make, then talk to us at back office and we'll take it from there.